ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
In Tokyo, a head and shoulders doesn't mean you need a dandruff shampoo. In Mumbai, a double top isn't two horns and a bull. In Frankfurt, a double bottle isn't a plumbing disaster. And in New York, a bearish engulfing isn't a scene from a nature documentary. There's one language that connects every trader on every desk, in every time zone. It's the visual language of fear, greed, and oh, I definitely should have set a stop loss. It's the charts. Welcome back, everyone, to Traders of the World, the only show fluent in the native tongue of the market. I'm your host, Flavio Lemos. All right, before we dive in, the ritual sacrifice to the YouTube algorithm. If this chat deposits any value into your knowledge account, smash that like button and subscribe, please. I'm so excited because I'm not alone. I'm joined today by incredible co-host Ariane Oliveira. And folks, she's a force of nature. Get this. Ariane is a certified investment analyst, a trader, a wife, a mother of 2 babies. Honestly, after managing 2 kids, navigating market volatility must feel like a vacation. She's a production engineer by background with a broker MBA, so you know her process is on point. During the COVID pandemic, while the rest of us were learning to bake bread, she decided to professionalize her trading career. She decided to go full pro, and she didn't just go pro. She became the boss. She launched her The Boss project and has already guided over 1,000 students to profitability. Ariane, welcome. Thanks for taking a break from Conquer the World to join us.
Hi, everyone. Hi, Flavio. It is great to be here. Thank you for the invitation.
In 1001 Nights, Scheherazade had to tell a compelling story every night to survive. In the financial markets, it's pretty similar. You had to read the market story correctly every day, or your portfolio might not survive. Our guest tonight is a modern-day Scheherazade of the financial markets. Tonight, we have basically rubbed a magic lamp and a true market genius has appeared. She's not offering us 3 wishes, but she's offering expert analysis on oil, forex, and equities in both English and Arabic. She's a truly global analyst. You have seen her on major TV platforms and read her commentary in the Wall Street Journal and Bloomberg, especially on the critical oil market, and she's here to grant us some market wisdom. What's fascinating in her background, she's not just an analyst. She was also a forex dealer. So she has seen the market from both sides of the trade. She is also a CMT charter holder and a powerful voice in the technical analysis community. A very warm welcome to Razan Hilal. Razan, it's a pleasure to have you here on the show. So let's start right here, there with that team. Let's discover if technical analysis is the open sesame to the market's cave of wonders. Ladies first, Ariane, please pick up.
Hi, Razan. It is a pleasure to talk to you today. Let's start at the beginning. What first sparked your passion for the financial markets? And what led you specifically to technical analysis as your primary tool for navigating them?
Hello, Ariane. Hello, Flavio, and hello, everyone. I just want to say thank you for the opportunity to talk markets and share market insights. So back to you, Ariane. For my journey, it all started with an internship at the Central Bank of Lebanon. And from there, we had a quick look to the trading department, where the leader of the trading department mentioned a book called The Complete Turtle Trader by Richard Dennis. So after I started reading this book, I took a fair look at technical analysis insight from A very interesting perspective. So Richard Dennis got a group of traders from diverse perspectives, and he taught them technical analysis from a certain strategy. So from there, I went on to learning more about technical analysis, and I met a dear mentor in the CMT community to learn more about technical analysis. And from there, I started working alongside my mentor as a market analyst and learning with the markets, learning the CMT. And after that, I started with my dealing job, looking at the markets from the back end of the screen before transitioning to my current market analysis job.
Your background is so unique. You were a foreign exchange dealer before becoming a full-time analyst. How did that experience on the execution side, seeing the order flow and the plumbing of the market, changed how you analyze charts today? It's a perspective most analysts never get.
Yes, definitely. So the dealing room experience, it was a very unique experience as I got to witness the markets from the back end. So as market analysts and as traders, we usually look at the market and the price from a certain angle, and from the dealing desks, you can look at it from the core driver of the markets, which is behind those charts, with the execution, with the order placements, with the creation of the instruments. And we also get to look at all the different types of costs that a trader might face between the spreads, the execution costs, commissions, and all the liquidity costs, the liquidity risks as well. So looking at it from the back end and from the dealing perspective, it just gave a different angle to the cost and to the liquidity and to the different market participants that we might be dealing with, rather besides looking at the structure and the patterns of the prices when we look at the charts.
Really nice. You're delivering insights in both English and Arabic. That's an incredible skill. That's an incredible skill. Do you find there's a difference in what each audience is focused on? How do you tailor your analysis for, say, a fast-paced Arabic language TV hit versus a detailed written report for Forex.com's global audience?
Yes, I do deliver in both the English and Arabic languages. And with respect to the fast-paced Arabic language TV interviews, so most of the time they give me all the insights that I need to know with respect to the macro drivers and the fundamentals that are going on the markets. And with that, my response would be directly to quantify that uncertainty and structure it with long-term key price levels and technical analysis structure that I'm seeing in the market. So I reply usually for the TV interviews and from the Arabic perspective with quantified technical insights. And when I'm writing articles with Forex.com, I usually enrich these articles with the macro perspective and fundamental drivers behind the technicals, as well as the intermarket relative strength and the technicals between different time frames on certain charts. And of course, and while writing also articles for Forex.com in English, I also translate them into Arabic on a daily basis as well.
As we here speak charts, so let's see the charts. Let's talk about your process. When you open a blank chart, so you can just open one of you want now, what are the first 2 or 3 indicators or tools you apply? What's the core of your day-to-day methodology? So please show us a chart on a trade you made and explain how you do your process.
Yes, definitely. Okay, so over here we have the Dow Jones chart. Now I just want to highlight initially how I approach charts. So if we don't have any just want to click on this. So am I able to work on the screen over here? While sharing my screen, am I able to work on the chart?
Yes.
Okay, yes. Dow Jones monthly chart. Is that it?
Yes, but it seems like I have the tools for the Google Meet. I want to access the chart itself.
Oh, you can minimize our screen with the cameras and just use the charts.
Okay. Okay, so this is the Dow Jones chart over here. And first, I just like to remove all the drawings. So just to give a perspective of how I approach the chart. So initially, when I tackle any chart with any sector or across any sector, I like to jump onto the higher time frame to look at the overall structure of the charts across the history to see where the current price stands with respect to its historical structure. And I also like to look at the charts in terms of Elliott waves. So you know the method of Elliott waves is, so we have an impulse waves where we have 5-leg structures, we have corrective patterns, and we also have corrective structures. So this is a more complex method to be able to explain with respect to the Elliott wave methodology, but that's one way I look at it. In terms of waves, high time frame structure, and I also like to look at the relative strength index indicator across from higher time frames to lower time frames. So over here, we can see that Dow Jones relative strength index indicator is back at overbought levels last seen between December 2024 and January 2025, and also last seen back in August 2021. So these are levels that preceded notable drops on the Dow Jones. So looking at where the relative strength stands with respect to its history and with respect to notable price movement allows me to set the chart into structure and start applying my technical tools with respect to that primary structure basis.
So you basically you are using now an RSI, and you place your Elliott wave count on it.
Correctly. Okay. So when I want to put back my the tools over here. So with respect to the Elliott wave count, this is a 1 and 2, 3, 4, and the potential 5. So if I'm going to put it over here, we have 3.
And then we will have the correction ABC to.
So this is just a risk.
Okay.
Correct. We only have a risk since we have a 5-wave structure unfolding on the Dow Jones chart from a monthly time frame perspective. So we can see that the overall price action from the Dow Jones from its positive bounce from the lows of 2020 is in a contracting form. We can see that the day-to-day headlines now bullish. We can see a bullish breakout for the Dow Jones above the 48,000 mark, and we can see that extreme bullish sentiment and rally across indices. Yet we can see that also the Dow Jones approaching this historical, the upper boundary of this historical structure, which connects the consecutive higher highs between 2022 and 2024, which only raises a sense of caution over here with respect to the continuity of this trend, and we just requiring confirmation, a clean close beyond the borders of this consolidation to be able to extend further bullish forecasts, especially that the relative strength index indicator is at overbought levels, flashing also caution as these overbought levels previously were followed by notable drops across the chart. And if we're going to also correlate it with the Nasdaq chart, Nasdaq is not currently also tracing these gains. We have quite of a divergence between the Nasdaq and the Dow Jones chart currently. Dow Jones is at its record highs. The Nasdaq chart is currently struggling to surpass these record highs. So a bit of divergence between the tech sector and Dow Jones might also raise a bit of caution with respect to the current highs that we are seeing in the markets.
Maybe a rotation taking place.
Yes, that is correct. And with respect to how I'm approaching the Nasdaq chart, also from hands-on technical perspective, I also like to use the channels. So when I approach a certain chart, I'd like to structure the trend in certain. I'd like to connect the points between consecutive lows and consecutive highs to be able to structure the overall price action. So over here, we can see that Nasdaq from the August lows has been respecting an uptrending parallel channel all the way till October 2025. We had a breakout, and the mechanism of the theory behind parallel channels, and we have a break from a certain angle from this channel. We extend the duplicated channel to be able to quantify or measure the possible next movements for this chart. So over here, we had a pullback from the mid zone of the duplicated channel, and we're also dropped back to the main channel over here, which is 24,650, and now we're back at a neutral zone, indicating that we need confirmation beyond these borders to be able to confirm whether we're going to have possible deeper pullback to recharge the 2025 momentum or another breakthrough to new record highs.
Do you have that studies that once the prices go outside the channel for upside, they can, once they go back to the channel, they can go in the above the channel.
Yes, so over here, I'd like to, so the channel bounds, they present support and resistance levels over here to be able to quantify the breakouts. So here, once we had the first breakout, the mid-zone of that duplicated channel presented the first resistance level. And then when we dropped down, we had the first support at the mid-zone, the next support at the bottom end. And now when we just reversed back, we have also the upper boundary presenting us with a certain resistance zone over here. A clean hold above this resistance zone is expected also to extend it to the next to the mid-zone of the next channel, and the clean hold above the record high for this year, 26,300, is possibly expected to extend gains towards the upper bound of that duplicated channel, possibly aligning with the 27,000 mark. Now, for now, as we're still holding in the neutral zone, we just need, from my perspective, the way I'd like to analyze market, I just wait for clear breakouts to confirm the possible next trend direction.
Oh, so just left to show us about the US market, the S&P 500. So please go on and show your S&P 500 chart, please.
Yes, definitely. So in line with the Dow Jones and in line with the Nasdaq as well, we can also see that the S&P 500 has been also respecting an upward trajectory and a trend line connecting consecutive higher lows all the way since August 2025. And similar way to Nasdaq, once people have clear break beyond the bounds of this channel, we also pulled back from the mid-zone of the duplicated channel. And now we're fairly back at that mid-zone. So we can see that the way that when we draw a channel technical structure on the chart, that is proven that the price is respecting the mid-zone and the respective borders of this channel, we can still forecast possible respect for these levels until proven otherwise. So over here, we still have the bottom border being respected as support, the mid-zone as well for a short-term support, and the upper border also for a long-term support. So over here for the S&P 500, I'll also be looking at a clean hold beyond the mid-zone of this duplicated channel and the record high, so possibly above the 6,800 zone to extend the possible forecast towards the 7,000 mark, and if not, a breakdown back below the mid-zone of this channel, the 6,730 might expose downside just again to the monthly lows, possibly back near the 6,600. Now, this border remains a defining level between the bullish and bearish bias. Over here, we're still in a bullish bias as long as we're in this bullish and respecting these uptrending parallel channels. As soon as we have a clean hold below this trend line, then we might be shifting towards the bearish bias and possible pullback risk for the 2025 momentum.
You showed us on the Dow Jones chart an ending diagonal. So,
yes.
And about Elliott Wave count in this, is it showing the same or is diverging?
So with respect to the S&P and the Nasdaq, they have extension for the impulses. So we can see here a 1, 2, 3, 4, 5 here. When we have a sharp drop, we usually count it as a fourth wave. So if I'm going to count the current wave over here, we might be looking at that structure over here, and we might be opening the way towards a deeper pullback. However, if we do break the upper bound of this fifth wave here, then we might be extending the fifth wave for another leg higher before we have that possible downturn. And with respect to the presidential cycle for 2026, it will be the second term of the presidential cycle, which usually faces policy fatigue, which might have potential momentum corrections in the market before the markets can continue with their continued record highs. Now, the reason why I started with the Dow Jones is because looking at the Dow Jones from a daily perspective, we can also see that bullish bias. Yet if we jump off to the monthly time frame, we can see that caution over here, which is not visible on the Nasdaq and the S&P. So I thought it might be worth sharing that chart, since they are all positively correlated, which might have a potential impact on both, or even confirm certain directional movements.
You are frequently quoted by Bloomberg and the Wall Street Journal for your oil market commentary. This is a market famously driven by fundamentals and geopolitics. How do you use technical analysis to cut through that noise? Could you show us an oil chart, please? and explain how your current technical view of them?
Yes, definitely. So with respect to the crude oil chart, we have a lot of fundamental drivers on crude oil with respect to OPEC production risk. We have also the geopolitical risks, and we have the overall labor market risk and overall demand, the tariffs between US and China. So we had lots of factors coming into affecting oil's price action. Yet to be able to quantify all these fundamental drivers, I stick to following a clear downtrend, parallel downtrend respected since 2023 on the crude oil chart. And it's also trading now within another 5-month downtrend as well. And it's trading near the mid-zone of both of these channels, which is a neutral level for crude oil. So the way to be able to confirm the current levels for crude oil, that short-term channel is defining short-term levels for me to be able to quantify potential short-term breakouts. And the outer bounds of this channel have the long-term price structures or alerts. So if I'm going to explain this step by step, so if you might have a potential breakout beyond the bounds of this 5-month parallel channel or beyond the 63 mark, then we might extend back towards the upper bound of this respected channel near the 70 mark, which can be the defining barrier between bullish and bearish bias on crude oil. And from the downside, if we drop below the yearly lows below the 55 mark, we might be exposed to the 49 barrier. Now, the 49 level is a very critical support level in terms of Fibonacci retracement, as it is the golden 618 Fibonacci of the overall uptrend between 2020 and 2022, and of course, eliminating the volatility, the noise. So here we can see the 618 is at the 55 level, which the markets were able to rebound from. And if we do drop below this level, we might have the variation of the 618, which I follow as well as a retracement, which is the 681, which is the 49. That might also have another rebound opportunity for crude oil, possibly presenting us with a long-term double bottom structure before a possible breakout in line with the overall trend. Now, one of the perspectives that I also like to use on crude oil is the 3-month time frame. I'm going to use another chart here just to explain it from a 160-year edge. So crude oil from the 18 has been respecting also an uptrending and parallel channel since the 1860s lows. Now, to be able to minimize the noise over here, I would use a line chart. So over here, we can see that the price action is respecting an uptrending trajectory and parallel channel. And we can see that it's with a 160-year trend, and we're approaching the bottom borders of this trend line. We might have either a continuation of this trend or a potential short-lived pullback for crude oil before it gets back on track. Now, the only time crude oil broke beyond the bounds of this channel was during 2020, and we can see this from the candlestick chart. And if we remove the noise, we can see the respected trajectory of crude oil, just raising risks on that 160-year support zone for the overall crude prices, regardless of the interplay of all the fundamental drivers that we're seeing in the headlines.
I also saw your recent analysis on gold and silver. These can be tricky markets that are pulled by many different factors. Could you bring up a chart of gold and tell us how you analyze it right now? Are you seeing any clear picture?
Yes, so with respect to the gold chart, I'm going to analyze it from a monthly time frame. So gold has traced a cup and the handle formation that has extended on the chart between 2011 and 2024. And the breakout was traced all the way to the full pattern target towards the yearly high near 4,380. Now, over here, we might have another bullish breakout for gold, as gold is not respecting overbought risks, and it's fairly going with having demand across the markets and going at it level by level. Now, over here, we are at heated levels given the price target of a decade pattern. And if you also look at the silver chart, we can also see that silver is aligned with a 45-year resistance extending from the 1980 highs. So the current highs of 2025 that gold and silver reached are pretty heated from a technical perspective. Yet, if we do manage to also break beyond these highs, then the old saying goes as the trend is your friend, and they might just continue with their positive trajectory. So if silver does manage to have a clean hold above the 55 mark, then we might see another extended, possibly towards 3 digits for silver, especially with its industrial use in the advancing AI and tech sectors.
All of them you are using log scale, huh?
Correct. Yes, I'm using the log scale on the charts to minimize the noise and structure the price action. And given the heated levels on gold and silver, I won't be surprised if we see a proper momentum pullback before these historical primary trends continue. And if they do break out, then we just follow the trend. I will not go against the trend unless we have a clear confirmation to do so.
Okay. We ask every guest this, and it's always the most valuable part of the show. Could you walk us through defining moments, your best trade, where the analysis and the execution just clicked perfectly, and your worst trade, the one that was humbling and taught you the most valuable lesson? And if you have the charts, we'd love to see the sign of the prime, please.
Okay, yes, definitely. So I'm going to start off with the best trade. The best trade I remember I have was during the crude oil prices on the 2022 highs. I remember it was a selling position near the 95 mark. This is Brent. Hold on one second. Oh, this is the crude oil chart. Yes, so it was approximately near the 95 mark over here. This was 2022 high, and this was 2023, just correcting the date because it was 2 years ago. So I remember it was near the 95 mark over here. It was a correction from the 2022 dip for crude oil, and it extended down with the 3-year structure that now we're seeing on crude oil. So I remember this was a good trade, and it was also combined with lots of geopolitics. It was combined with OPEC policies. So overall, this trade was just leaning bearish, and it was a fairly neat trade. So I can say this was positive, one of the positive trades that I took, and they also aligned with the overall decline of the RSI from the 2022 peak. And I remember this time was the cool down from the Russia-Ukraine breakout tensions. So that was one trade, and I can say the bad trade, or one of the worst trades, was on the gold chart. So going against the uptrend on gold can be very damaging, a very damaging move, because when gold tends to break out, especially from a decade pattern or a decade resistance, it doesn't usually stop to take a breath. It is an aggressive breakout, correct? So I remember approximately in late 2023, I took a selling position for gold below that critical resistance level. I was counting that Elliott Wave pattern here, the 4, as a possible. I was counting 5 legs in this consolidation for wave 4 that we had it truncated over here before we extended to the upside. And over here, I did not have a stop loss. I was not near the chart. And when gold made its breakthrough, it was a bit damaging, and it was one of the worst trades. But it was also it was a very good tuition fee from several perspectives. So one of them is never to open a position without a stop loss, or even capitalize losses to be able to recover those losses. And another one is just keep an eye on the primary trend. If the primary trend is an uptrend from a monthly time frame, or the overall trend, and we have a position that's against it, we need to have strong risk management, especially if we're right below a very critical resistance level, because that might break out. And gold has been constantly showing a very steep price action in the past year or two. So we don't have a lot of room for correction or to recover a certain position. It's quite aggressive. So jumping out of the trade and just aligning with the primary uptrend and possibly jumping on buying opportunities for gold is possibly the best strategy to go when we have such a strong primary and steep uptrend.
You forgot one lesson. Don't go against the world central banks.
Yes, 100%.
Too much money.
Given your background as an FX dealer, I have to ask you about the dollar index. It's arguably the most important chart in the world for global macro. Could you show us your chart for the DXY? What is it telling you right now about the broader picture for risk assets and commodities?
Yes, definitely. So with respect to the US dollar index chart, also I'm going to jump to a monthly time frame. Also, I jump onto the higher time frame to see where the price action is currently at. And notably, the price action for 2025 dropped all the way down to the bottom border of a trend line connecting consecutive higher highs on the US dollar index since the 2008 lows. So over here, we can also see the price action encompassed in an uptrending and parallel channel on the DXY. So as we are currently sitting at the bottom border of this channel, and also I have a time cycle analysis here, so we can see that at every trough and every low of this cycle, we can see that the lows of the price action of the charts are fairly aligning. And over here, we had an extended consolidation where we might have a bit of variance and a bit of deviation, but I'm currently watching it closely for the strength of that 17-year support and trend line. And if we drop down to the daily time frame on the US dollar index, we can see a potential either double bottom formation or potential inverted head and shoulders formation. We still need a clear confirmation for that. Now, it's possibly, I'm detecting reversal patterns as we have that critical support on the monthly time frame, that we can see some exhaustion and consolidation on the shorter time frames. Now we're approaching year end and with the uncertainty regarding the US economy. So I'm looking, and I've been looking at the 120 resistance for quite some time. A clear hold above this resistance might open the way for more strength for the US dollar index against global currencies before possibly redirecting. And two key charts I like to look at to also help confirm my analysis on the DXY are the euro dollar and the British pound for two main reasons. So with respect to the euro dollar and from the monthly time frame, it managed to comfortably break out of its 17-year channel to the upside. And if we do manage to, and if we might have a potential strength for the dollar against the euro, that might be to recharge the momentum for the euro and possibly retrace the bounds of this channel before extending. And if not, if the strength of the euro is going to continue above the 118 mark, then we might see 2021 highs and 2018 highs once again in play, which is above the 120 mark, extending up, which can inversely correlate to the DXY. And from the downside, breaking below 96 for the DXY is my defining barrier between bullish and the bearish bias, which might extend. And if we do manage to break it, then the narrative will flip and the bias will flip, and we'd be looking for potential next support levels, which might be at the previous four from an Elliott Wave perspective, near the 89 to the 90 mark.
Maybe that can explain the rush. Everyone is for gold, silver, and maybe Bitcoin, I don't know, because of the less strength of the dollar, right?
Yes, that can be. And also, there's also a very notable correlation between precious metals and US indices. So we're seeing overall market sentiment and hype. We can see the US indices going up, and we can also see investors hedging gold in their portfolios over with the US indices. So we're seeing liquidity appetite for both assets at the same time. And the uncertainty on the overall dollar situation is also supporting this further.
What's your current view on Bitcoin?
Okay, so with respect to the Bitcoin chart, we can also see Bitcoin leaning towards the bear side as it broke out or broke below a trend line, connecting consecutive higher lows since 2022. Yet the 100,000 mark or the 98,000 mark is a critical support I have in sight over here. So as long as we're holding above 98, we might have potential to redirect back towards record highs. So for me, we still have a strong uptrend for Bitcoin. If we're going to enter a correction phase in line with US indices, then it might be alongside the broader markets, possibly aligning Bitcoin with previous significant resistance levels, possibly turning now into support, which is near the 75,000 before continuing the uptrend. But the overall uptrend is still looks bullish for Bitcoin, especially that we have increasing global regulation for cryptocurrencies, and also starting here with the UAE. So starting Q1 2026, we have Emirates Airlines accepting Ethereum as a method for payment as an airplane ticket. We have the increase in regulations to integrate cryptocurrencies into global economies is possibly setting a sustainable hold or sustainable trend for cryptos, and especially looking at Bitcoin and breaking above, a clean hold above the 124. I can forecast the Bitcoin towards the 150 and the 200,000 levels should that confirmation take place. But for now, in line with the overall markets, it's a cautious hold from a momentum perspective. And we can also see the RSI diverging with that overall uptrend between 2024 and May 2024 and October 2025. We see that divergence, which also raises just a bit of caution and the need for confirmation for further upside to be able to realign with this trend.
Your bio highlights your commitment to supporting market risk management. When you are talking to clients or other traders, what's your number one non-negotiable rule for managing risk?
My number one non-negotiable rule for managing risk is stop loss. So the placement of a stop loss is very important. And when one does not place a stop loss, they will have a bias towards re-entering the market or increasing the leverage on a certain position to realign with their urgent analysis. But that can end up exposing the portfolio to a very large drawdown, which is not fairly recommended from a risk management perspective. So setting the stop loss, a fair stop loss for a position below levels that usually defy the bias between bullish and bearish bias from a long-term perspective on a chart, for me, is one of the golden rules for trading, because we need to be able to take hits when we're entering the markets, because we are going to take hits and we need to have a certain harmer, and we don't want one hit to wipe out a whole account. We need to stay in and navigate and sail these market waves to be able to profit and trade the markets.
As a successful woman in global financial role and a CMT charter holder, what is the single most important piece of advice you would give to another woman starting her career in market analysis today?
Well, for me, with respect to this question, I think it's a very good time to be a woman and working in the financial industry, because now we have a lot of demand for multiple perspectives in this markets. And no matter who enters the financial markets industry, if we do have a structured approach, a structured agenda, and a system to be able to approach the markets with a certain goal in it, then I highly support all this field, and especially the CMT and especially technical analysis, because it tends to be sent to quantify all the market headlines and uncertainties that we see into a simplified trend, and allows us to manage our risks between whether that would be saving, that long-term investments with physical metals, and with respect to the currencies that we're holding also as well in our wallet. So career-wise and from a personal perspective-wise, I do recommend technical analysis. And for women entering the field, of course, reading the books, respecting technicals as a strong risk management perspective, and of course, understanding the fundamental drivers that keep on changing day to day behind those charts.
Razan, this has been fantastic for our audience who wants to follow you and follow your analysis in English or Arabic. Where are the best places to find you online?
Yes, so with respect to my English articles, I post them on the news and analysis section on forex.com alongside the global analysis team that I work with. So we cover the markets on a 24/7 basis. We have analysts across Australia, the UK, the US, Mexico. So we have a fair coverage across all market hours on the news and analysis section. We also have the StoneX YouTube page. We can also see coverage of all global macro assets as well from a technical and fundamental perspective across all different diverse perspectives from our StoneX team. And we also have the forex.com YouTube, where we can see also more technicals across the Forex market also from our team. And for me, from my personal profile, that is still emerging over here. You can also follow me on RH Waves on my Twitter account for also medium to long-term outlooks. And in specific cases, when the short-term is aligning with medium and long-term, we can also see the updates on my Twitter in both Arabic and in English simultaneously.
Folks, it's time to grab our magic carpet and set off. Razan, I can't thank you enough. This was true masterclass. Your ability to blend a dealer's perspective with analysis discipline and to do it in two languages is just incredible. Thank you for sharing your thoughts and your wisdom with us.
Thank you once again. It was a pleasure to hear from you and see you drawing in the charts and see that some analysis is similar to what we have been looking here. It is a real pleasure to meet you.
Thank you so much for this opportunity, and it was a great pleasure as well talking markets and meeting with you, Arjan, and Flavio as well.
That's all we have for today on Traders of the World. A massive thank you again to Razan Hilal and to my co-host, Ariane Oliveira. Until next time, stay disciplined, watch those key levels she talked about, and manage your risk. Take care, folks. Bye-bye.
Thank you.
Okay. Razan, your name, Hilal, is there a football team with this name? Does anything to do, your family has a football team or not?
I think there is a football team in Saudi Arabia, I think, by Hilal, if I'm not mistaken, maybe. And there's also a bank.
There's also a bank. Oh, big
Not-
family.
Not related to me, though.
Oh, that's a pity. That's a pity.
You're so young. How long have you been working the market, financial market?
I get asked this question a lot. So when I first stumbled on the turtle trading book, I was 17 years old, and I was excited. And I also was lucky to meet a dear mentor. So he started teaching me his experience while learning the CMT curriculum at 17. I took my CMT 1 at 18, and then level 2 and 3 needed more practical experience in the market. So I took my time with more. I tried the 2 at first, but I didn't pass it at 19. I needed experience. So then I went on with the dealing room, and with the dealing room, I also had one of the excess screens to study the CMT and learn more about the technicals. And from there, I rushed into my career.
So you are really a true genius. So
Yeah.
That's great. So you get the CMT designation with 18?
No, I got the CMT designation at 25, but I
25,
started.
okay. You started because there are three tests. Okay.
So I was studying. I was finishing up my university while I was studying the CMT at the same time. So by the time I started working, I was finishing up my CMT exams.
What did you take in university?
I also studied banking and finance.
Banking and finance. Okay.
But it's nothing compared to the CMT curriculum, because we can learn about lots of concepts about the finance world, the banking world, the financial markets, but they don't teach us risk management or how to use these stocks, how to navigate financial markets, and all these instruments that they teach us. It's basic definitions, I can say.
That's true.
That's a good start.
Yeah, definitely.
Me and Ariane, well, we are engineers, so it's totally different. We never seen a account balance statement or something like this in the university. I build buildings, so you learn to. She was made to work in a industry or something like this, so it's nothing to do. You need to study everything again, but it's good to start again. I always do this with my life.
Olá, espero que esteja gostando da entrevista. A Trader Brasil foi eleita por 2 vezes no Rank Awards 2024 e 2025 como a melhor academia de formação de investidores do Brasil. E ela tem um presente para você que está assistindo esse podcast. 10% de desconto, é só usar esse QR Code que está aqui embaixo e a gente te espera lá, ok? Agora não esquece de dar uma moral pro Flávio. Curte, compartilhe esse vídeo e se inscreva no nosso canal, ok? Até a próxima e obrigado pela presença. Valeu!
Do this with my life, to start again a new thing that I don't know. For instance, I'm playing the trombone right now. I didn't play the trombone. You can check my Instagram and see me live.
I've seen this in Rio, right? Back in Rio.
Yeah, it's true. And now
for me,
next year I'm gonna
working
learn sailing. So every time and then I try to learn a different experience and different thing that I don't know anything. So starting again for me is like reborn. It's gives me fresh life, and it's great.
I think it's great too. But 10 years ago, I was living in São Paulo. I was working at Braskem, at Treasury Desk at Braskem. It's like a multinational petrochemical here in Brazil. And then I came to Goiânia, it's another city, to get married. And then the pandemic started. I became a mom, and I was like, what can I do now? And let's go to financial markets.
That's a nice shift, honestly. And it's also nice to keep looking at new things. And I think the financial markets world is just keeps on changing. So it's never a boring thing. I also sometimes think I should have went into engineering, because I see lots of good engineers excelling in this field because they're good at structuring their algorithms and their strategies from an engineering perspective. So I always admire that. And I always see engineers fabricating their strategies in the markets really more often than I expected.
That's
Yeah.
fun.
We are dull persons because all engineers want to know how it works. So they want to open the hood of the car to know how the things get work. It's the same with the chart. How it's constructed, this indicator. I want to open the indicator up and make another one with this. So that's a good thing. I was talking with John Bollinger. You know John Bollinger, probably.
Yes.
John Bollinger is a very close friend of mine, and you were talking about beers and long plays. You know what is a long play? It's like a disc, a black disc. Then you put a needle to play songs. It's old thing.
Oh, okay. Yeah.
We loved it. We loved it. I love it, and John loved it. So he invited me to see his, and I love it. And I bought one for me here in Brazil, and it didn't play. Man, why it's not playing? I place every cable, turn on the thing, place the receiver to play it, none. Then my kid, 10-year-old kid, said, "Papai, father, there is no needle. You said there is a needle, but there is no needle." And he was correct. There was no needle. I need to buy another needle to place it and to play the disc. Now it's working.
But what type of music to listen to?
Yeah, it's like how do you say that? It's a vintage thing. It's used to have a lot of these in the 80s, the end of the 80s. Now and then it was took over by the CDs and then the DVDs, and then we don't have it anymore. Just Spotify and everything is streaming. So things change, but the listening to the disc, the black disc, and switching the sides is an awesome experience. You should try.
You can feel the authenticity of the music and the sound while you're at it. Definitely. I really love music. I play the violin, and I also love to reach out to new instruments and learn new instruments as well. So you said you're learning the trumpet?
Yeah, the trombone. The trombone is like you have a big boat here. And you know that I always compare music to charts, because when you read music, you read the tune. Yeah, it's like reading the patterns.
Yeah.
So and you got the rhythm of the music and the rhythm of the charts, that you have the Elliott Wave for this. And I always compare one and another. It's a close relationship.
Yes, it's fascinating, honestly. The connection with the frequencies, the waves, Fibonacci numbers, with everything connected. It's honestly very fascinating.
Okay. Well, thank you very much, Hassan, for you being with us today. I know it's almost late. It's dinner time. I know you live in a city that never sleeps, but thank you very much for.
It was a pleasure meeting you both, and thank you for this opportunity. It's I don't mind at all staying up late for these types of opportunities.
Desculpa, eu pulei uma pergunta, eu vi que você teve que fazer. É porque eu tava tão vidrada no que ela tava explicando, eu assim,
Não,
gente...
na verdade não pulou, não. Na verdade, ela falou a pergunta que ela estava que você ia fazer, ela estava respondendo ao vivo.
Verdade.
Ela falava sobre o Dow Jones, o S&P 500 e o Nasdaq. Então, foi ali que eu pulei, mas eu...
Muito bacana
Gostou?
mesmo. Muito bom.
Ah,
Nossa,
legal.
ela é bem inteligente.
Não, mas que bom, mas, assim, a experiência é que é legal, né? De escutar uma pessoa diferente,
Super experiência.
uma outra cultura.
E é engraçado, porque assim, a gente aprendeu as mesmas coisas, ela fazendo a contagem de ondas Elliott, mostrando no mensal, aí quando ela falou os Bitcoin ali, aquela região, foi justamente onde eu e todos os meus alunos, a gente comprou nessa última queda do Bitcoin, estamos lá para alvo semanal, então é algo de mais longo prazo, achei muito interessante, muito, foi muito bacana. Muito obrigada pela experiência.
Meu papel aqui é ser como embaixador mesmo. Então, fazendo esse meio caminho, mercado brasileiro com o mercado mundial, e aí sempre apresentando as pessoas. Então, obrigado por você ter vindo aqui.